Hey everyone. This week, Marcus and Millichap will release the 2026 Retail Investment Forecast. This comprehensive report highlights key trends shaping the retail real estate investment climate on both a national and local metro level. And in this video, I'll highlight some of the key retail real estate trends as well as some of the markets with the strongest retail investment outlook for 2026. Now, I'll start with the big picture. From an economics perspective, retail sales and consumption remain positive, although on an inflation-adjusted basis, the gains in 2025 were modest. The slackening pace of job creation expected in 2026 will weigh on household formation, moderating demand for some types of retail goods. In addition, the impact of tariffs continued to be felt by retailers, especially small businesses. But at the end of the day, the US is still creating jobs and retail sales remain positive. And retail space demand remains sound. The limited construction pipeline, with almost 75% of the total construction being single tenant, will help sustain vacancy rates in the 5% range on a national level. Rent growth on a macro level is expected to remain positive but modest, in the low 1% range. But some of the top metros may achieve rent gains north of 3%. And from an investment standpoint, retail real estate transaction activity gained momentum last year. In total, retail property sales in 2025 reached its third highest total of any year on record, falling short of the surge in deals in 2021 and 2022 when interest rates were exceptionally low. One force fueling transaction velocity has been the recalibration of retail property cap rates, which have increased over the last few years as interest rates have climbed. The gains in sales velocity have also been reinforced by the recent downturn in the cost of debt capital as lenders have tightened their spreads, lowering the interest rates on commercial real estate loans. Now, I'll share some of the retail markets at the top of the Marcus & Millichap Retail Real Estate Index, which has a one-year outlook horizon. I'll start off with Southeast Florida, which is positioned to outperform in 2026. The area includes Miami, which ranked 8th in the index, West Palm Beach, which ranked 5th, and Fort Lauderdale, which ranked 3rd this year. Vacancy rates across this region remain below the national average, with Miami closing out 2025 at just 3% vacancy. Rent growth in Fort Lauderdale gained momentum last year and is forecast to rise by 2.8% in 2026. And West Palm Beach, which, like Miami and Fort Lauderdale, is expected to have minimal new retail development in the coming year, generated modest downward pressure on vacancy rates and positive rent growth. Central Florida also ranked highly in the 2026 index, with Orlando coming in at number 10 and Tampa ranking number 6. While the vacancy rates in these markets are expected to tick up nominally in 2026, they both remain well below the national average, with forecast vacancy rates of 4.4% in Orlando and 4.1% in Tampa. And in 2026, Orlando is forecast to achieve 1% rent growth, while Tampa generates gains of 2%. Charleston is another top-performing metro that has generated outsized job creation and population growth in recent years. Those gains have fueled the performance of retail real estate in the metro, with a forecast 3.3% vacancy rate in 2026, supporting 3.1% rent growth. These positive trends have boosted Charleston to the number 4 ranking in the Marcus & Millichap one-year index. Fort Lauderdale, as I mentioned earlier, ranked 3rd in the index. And the number 2 market in the 2026 Marcus & Millichap Retail Property Index is the Raleigh-Durham area of North Carolina. The Raleigh-Durham metro benefits from a diverse economy that has spurred strong employment and population growth over the last few years. At the same time, retail development has been modest. In 2025, Raleigh-Durham closed out the year with just 2.8% vacancy and 4.5% rent growth. Our forecast for 2026 is a bit less bullish than the actual results from 2025, but vacancy remains low at a forecast 3%, supporting 1.3% rent gains. And the number one retail real estate market for 2026 based on a 1-year outlook is Charlotte, North Carolina. Charlotte is another metro that has generated outsized job creation over the last 5 years, spurring strong population gains. But at the same time, retail construction has remained constrained, averaging just 0.6% inventory growth per year. The metro closed 2025 with 3.6% retail space vacancy and 4.3% rent growth. In the coming year, vacancy is predicted to decline by another 10 basis points, while rent growth accelerates to 4.7%. That's the strongest rent growth forecast of the 50 markets detailed in the 2026 Retail Investment Forecast. You can get a copy of the 2026 Marcus & Millichap Retail Investment Forecast, which provides both a national perspective as well as a drill down on 50 major metros on marcusmillichap.com. This detailed report will help you keep your eyes on the horizon.